I am Jan Blanchard. I am with PCC's Pediatric Solutions Consulting team, and I am here today to introduce to you Mr. Paulie Vanchiere. He's a good friend of ours with me.
Hey.
Hey, Paulie.
How you doing?
Doing very well. How are you?
Oh, pretty good.
Paulie's going to talk us through setting up accounts payables and give you some great advice with regard to your general ledger. So without further ado, I'm going to ask Paulie I'm going to stop sharing so he can share the good stuff, and he will take it away.
All right. Well, thank you. I appreciate everybody taking the time to join us today. So, except for the name of the guy who's giving this presentation, I appreciate the opportunity to join y'all. And, with a group of people like this, everyone comes from different backgrounds. Let's see. There we go. So today we're going to talk about accounts payable. We're going to look at a little bit about internal controls, the workflows, some things that we run into when we're helping practices, as well as the chart of accounts. For many of you who joined me at last year's users conference in Burlington, the first half of this you may find familiar. The addition that we're really adding is the chart of accounts and how important it is and how we set things up. And for those who were not there last year, we kind of have to run through everything before we can really talk about the chart of accounts. Today, we're going to talk about what options are out there, really how you should be thinking about your accounts payable process. With PCC, you've got a really good solution for your billing and your electronic medical record, which is one silo of data, if you will, or two, your practice management data and your the health records. But you also have the accounts payable, and trying to keep track of all that, which is important. And so we want to walk through some concerns that a lot of people have been looking at. And primarily, the accounts payable, when I say accounts payable system, I'm thinking about QuickBooks, Peachtree, Sage, some of those other things as well. And so with that, we're really using that system to make sure you pay your invoices on time, and also to have internal controls to make sure that people aren't spending money that you're not supposed to be spending. And we do it all in a way that generates some accurate reporting. So we have several different scenarios for most practices that are here. And those scenarios, I would say 99% of the people here today fall into one of these four buckets. Number one is a doctor, simply one of the physicians or the owner of the practice, pays their own bills. Scenario two, the office manager takes care of paying the bills and making sure the checks are drafted. And they also sign and send out the checks. Scenario three, the office manager will prepare everything, but the physician or the owner of the practice actually signs the check. And then the fourth scenario, you may have a dedicated bookkeeper, which is actually more common than most people think. And that bookkeeper will prepare the checks and make sure the journal entries are in there and so forth. So I think 99% of the people joining us today fall into one of these four categories, and they all come with some challenges, and they all come with some very positive things. And so we're going to kind of bounce around through those. But before we get into that, we need to understand, why do we look at a good accounts payable process? And to me, the first step in this has to do with what's called internal controls, making sure that money does not leave the practice until properly authorized. Now, if you own your own practice and you're writing your own checks and you're doing your own thing, that works great. There's really not that big a deal in terms of someone stealing money from yourself. So, but whenever you have other people cutting checks or other people helping you in this process, we need to be concerned about internal controls. If you ask accountants what their thoughts are on internal controls, 99% of them will probably reference what's called the fraud triangle. And basically the theory is that there are three components that really drive the fraud. One is people feel the pressure to steal money from you. Second, they see an opportunity, such as, hey, I'm just going to write checks to myself because nobody's checking on anything. Third is rationalization. Somehow they justify stealing money from the practice or sending checks to people they shouldn't be as a way to resolve whatever pressure they're feeling. And underneath those three components are three major components related to fraud. And the reality is that as a business owner, you cannot do anything to control the pressure or their rationalization. The only thing you can look to do is to eliminate the opportunity. And that's where strong internal control comes from. And we're going to talk briefly about that. And then as we lead up to the chart of accounts and the general ledger and what you're doing. But internal controls are necessary because they help you to identify any weaknesses in your processes. If you have a situation, are you reconciling the cash deposits that come over the counter? Are you looking at other things along the way? Are you looking to make sure that everything is properly accounted for and being routed to the correct place? You need to control your environment. Too many times I will visit a practice and I see that they may have three people who are working the check-in as receptionists or checkout, but they're all sharing a same cash drawer. That is an internal control concern because we don't have any accountability. I need to know who I need to approach if something comes up short. And so that's why I really encourage people to have, for everyone working up front, have a separate cash drawer for each person. And because, again, we don't know who to hold accountable if something comes up short. Charging, controlling entries, we got to look at our credit card terminals. We need to make sure that if you're using payment pros, you work with them to make sure that there are strong internal controls, that I can't just walk up to a credit card terminal and put a credit on my own personal card. And usually they come with some pretty standard controls like that, but those controls are really important to limit activities that are not in the best interest of the practice. Charge and adjusting posting, I'll defer to the experts at PCC, but those come with some concerns. And, how do we reconcile that? Everything we're looking at so far is generally in order to make sure that the right things are being done and we don't give the opportunity for people to take advantage of it and somehow gain financially. There's a big education component and awareness, and the way you do that is run daily and weekly reports to make sure that what was posted in payments in PCC happens to match what hit the bank in some way, shape, or form. And so that's done whether it's weekly, monthly, daily. That's an internal control that we need to make sure that we're on top of. And then last is the cash handling audit. How do we monitor things and looking at making sure that that cash drawer is there and has the proper amount in it? Are we making sure that the deposits match up with what's posted in PCC? And everything that I mentioned, every one of them, you're probably wiping your head saying, "Oh my gosh, that's a lot of work." And that's where we have to strike that balance for a lot of practices. The need for internal control versus the simplicity and convenience of being able to run your business. We need transparency, but we also need the accuracy to ensure that all the money is properly accounted for, while at the same time allowing people to do their function within the practice, such as posting payments and adjustments or being able to make change for the employee up front. And there's a balance between internal controls and access to be able to keep the business running. And so those are important things, but also we look at the validation to make sure that things are being done, for example, in the vaccine payment. For example, when you order your supplies, think about how that's done. Do you just go in the vaccine shop or Merck or Pfizer and place the order, and then the next thing you know, you get an invoice and pay it? We need to look at that process and make sure that as we order it, number one, we're ordering only what we need. But then we also make sure that what came in matches in the invoice that's going to come down the road. So you need to look at those internal processes to make sure that we're paying the right amount. There are times, and fortunately not very often, but there are times when things arrive and it's not everything that's on the content list, or you get supplies from McKesson or Medline or whoever you're using for your medical supplies, and things just aren't jiving. You need to be able to make that review to see what's going on and look at it and look at those internal controls to make sure that what you're paying for is what you actually receive. Many large organizations will use what are called purchase orders, and they go through a series of levels of authority. For the most people who have joined us today, this is probably not necessary to have a very intensive purchase order system. But if you have multiple locations or multiple people want to look at things, that might be something to think about. And we'll talk about that in a few moments. But really, it's also about the expense authorization. Who has the approval to sign checks? Who has the approval to use the credit card? That is a physical access situation where if you have the checks under a lock and key, you have the credit cards under a lock and key, and they're used by other people as needed, they retrieve them. Where it gets a little tricky is online bill pay and other things. So sometimes you may have your office manager who needs the ability to download statements, but they also have the ability for ACH transfers. So you need to work with your bank to see whether or not outgoing transfers or any money moving out of the practice is subject to additional authorization, or you can segment it. So those are the kind of things that we want to be looking at whenever we move through these things. So normally, if you're looking to order vaccines and you have a comprehensive purchase order system, first you figure out I need 30 doses of MMR. Sometimes there is a requisition by way of email or within the system that gets approved, and it generates what's called a purchase order number. Now, these types of things you can do within QuickBooks. Just about any of the accounts payable systems give you the ability to manage those purchase orders. And then once the order is placed, you'll log into Vaccine Shop, place the order, and then when it comes in, you're going to do that validation. You'll go back into QuickBooks and confirm, yes, we did get 30 doses of MMR that we ordered, and then that initiates the payment processing. This is a very comprehensive, probably most Fortune 500 companies follow this exact method. I don't tend to think that this is really necessary in a conventional pediatric practice where you have people that you're working with. Normally, what we see, and it's entirely appropriate, is that the office manager or the clinical supervisor or someone places the order comes in, you check it off, make sure it matches the receipt, and then you make sure that matches the invoice before you pay it. Keep it really simple. But where we run into problems is what happens if someone orders more than they should have? And then those vaccines show up, and you can't really return them right away. You're going to have to wait and either use up the inventory and this, that, and the other. So if you're having a problem with too much coming in, there are some ways to build in an authorization process. But for the most part, people, they're surrounded by people they trust, but you need to measure that risk appetite to see. This is what it sort of all leads into, is that, yes, we can put a lot of steps in place to have as strong of internal controls as possible, but we sometimes hit what's called the point of diminishing return. I can add a lot of bureaucratic layers that's going to help us, but at some point, it just becomes counterproductive, and it may not be worth the effort. And so that's why this is sort of my rationalization. Not every practice needs a full-blown purchase order system, but authorization, and it really is going to vary from practice to practice on how far they need to go. So as mentioned earlier, we had talked about auto payments or ACH payments and those kind of things. This is one of the concerns in the internal control process where you have, for example, Capital One or American Express will automatically, the day before the due date, pull the money out of the account and pay it so that you're never late on a payment. That can be problematic because, again, we're trying to balance simplicity and convenience with internal control. And what we're doing is we're assuming that everything on that credit card statement is correct, even though the payments are before the payments we leave. And so I'm not saying that's a bad thing. It's just that people need to be aware that auto payments can be a little tricky, and it doesn't necessarily have money may be leaving, cash may be leaving your organization for things that are not appropriate. And so you really need to look at that and see how do we make sure that the charges are valid before the cash leaves our practice to pay those invoices. One of the biggest, most common concerns I run into in accounts payable is what I call stacking invoices. And what generally happens is the electric bill comes in, the vaccine bill comes in, the McKesson bill comes in, and the office manager or someone puts them all in a folder. And then once a week, they sit down and they enter in all the invoices, and then they print all the checks and they bring in the checks. That is problematic for a variety of reasons. And the reason it's problematic is because I may get an invoice today for my Prevnar, and it's due in 60 days or 30 days. And until the time comes that they enter the invoice into the accounts payable system as a pending invoice, I really don't know, hey, what do I have due in the next week, 2 weeks, 3 weeks, 2 months? And so what we encourage practices to do is as the invoices come in, go ahead and enter it, even though it's not due for another 30 days. Go ahead and enter it and set a due date. And then that way, you know, by looking at a certain report within the accounts payable system, you can see, I have to pay out $50,000 in the next 2 months or what have you. So that's a concern that I think most practices can consider looking into. It is probably the most common concern that I see related to invoices. So go ahead, just talk to whoever's doing your accounts payable. Look, as the invoices come in, go ahead and enter them, set the date, and then that way you can see it. It's going to show up on your balance sheet as accounts payable due, and you can see the amount that's coming in and be able to better plan your practice. The last concern I want to talk about is whenever you have a check. So if I go see Dr. Blanchard, and Dr. Blanchard hires me to be her bookkeeper, I then get the invoice or the credit card statement, and I'll generate a check, and I'll bring it to her, and it's made out to Capital One credit card. And Dr. Blanchard signs it, and then I drop it in the mail and send it back. The problem is that Dr. Blanchard, unless she sees the statement and the receipt, she is not really confident that what she's paying for was an appropriate expense. And this is the one opportunity that you really have to review the invoices, the statement, and all the supporting documentation to make sure that that was an appropriate business expense. And so what we want to do is have the person who is, particularly when paying that credit card statement, whether it's online or by way of a paper check, Dr. Blanchard needs to review all the receipts that are tied to every single line item on that particular credit card statement. That way she can see that, yes, this is correct. And Dr. Blanchard needs time. What we don't want to do is we don't want to ambush her in between patients. Hey, can you sign this check real quick? If you're properly putting the invoices in and they're on top of it and doing things that they should be doing, you should be able to have a couple of days to allow the physician to review the invoices and sign the check to get them out in the mail. If you're having to rush and constantly hit that due date deadline, and you constantly hear, this invoice is due tomorrow, there's a problem. And you need to back it up and really think through, are we doing this the best way possible? There's an old saying in accounts payable and finance, you need a good accountant, but you need a better bookkeeper. Accountants are really good at what they do. I mean, they're some of the smartest people in the world. They passed the CPA exam. They obviously know something. And, I mean, they're just really smart people, but they're very expensive. and they're looking at the entire accounting process. And with a bookkeeper, number one, on an hourly basis, they're going to be much more economical, and that translates for doing the same work. It makes more sense to have a bookkeeper do your work for you. If you are working with your accountant and they offer bill paying services and those types of things, what I normally see is, well, what I have been seeing lately is my accountant offered to do some very basic bookkeeping for me and my company. And I told him, said, look, I'm not going to pay accountant rate. And he said, no. He said, when we're doing these types of services, we charge you at basically 50% of the rate to be more reflective of a bookkeeper rate. And so that I can live with, as long as it's still a reasonable price. So if your accountant's doing all your bookkeeping services, it's worth asking and seeing, look, you're not doing it. I'm not tapping into CPA level expertise. I shouldn't have to pay $200, $300, $400 an hour for bookkeeping, and they'll usually offer a bookkeeper rate. But if they're involved, you should also be able to get the information very quickly. And with a good bookkeeper staying on time, and if you're classifying the expenses correctly, by the fifth or fourth, for sure by the end of the first week, you should have a good profit and loss report that shows you all the financial activity, so that you can move forward and be able to continue managing the practice and keeping an eye on those expenses. The best way to do this is with some automation. And very simply, the automation is as follows. You get an invoice in the mail or emailed, or you have it set up as an auto payment. You're going to receive that information, and then you're going to process that invoice. I'm going to go ahead and take that Merck invoice that's due on July 5th. I'm going to put it in QuickBooks, and I'm going to route it for approval. And, there are some different ways to do that. I'll show you one way in a few minutes, but basically this step in the process is to get those invoices and enter it in the accounts payable system. I know at all times how much money I owe over the next 2, 3, 4, 5 months, get it into QuickBooks. Then there's an authorization level. In most practices, the authorization is when Dr. Blanchard signs the check. Normally, what you would want to do in an ideal world, and again, we're trying to measure, the need for internal control with the ability to manage the process. Ideally, what I would like to see happen is Dr. Blanchard says, yes, go ahead and pay the Merck bill, and then at that point, the check is generated. Practically speaking, that doesn't work for many people who've joined us today. Most people, they cut the check, they attach the invoice, and then they give it to Dr. Blanchard to review, and which is normal. That's okay. It's just a little bit different than what would be an ideal way in which to distribute those funds out the door. Now, the simplest way to do this is if you're using QuickBooks Online, and is to get an add-on product called Bill.com. And very basically, and I have no financial interest in QuickBooks or Bill.com, other than to share with you what I use as the CFO in the practice that I'm with 25 providers, is for when the invoice comes in, we put it in the system. And then once it's entered into the system, we scan it and we attach it. So I don't have to have a paper file. And then it generates a little email or an alert that comes out on my phone. And the phone says, hey, here is the rent check for this location. Do you approve or not? I hit approve. And then the next step is it goes to the managing partner. And the managing partner decides whether or not he's going to approve it or not. If he hits approve, then at that point, it's automatically going to pay. Bill.com will print a check and send it out to you, for you. And that is really nice for a variety of reasons, particularly in COVID, where you don't want to have the bottleneck of trying to, just dealing with the printer alone can be a hassle. But it makes it really nice and automated. There is some cost associated with it, but I find 9 times out of 10, the cost is negligible considering the efficiency of which things are going on. Number two is internal control. It allows you to make sure that certain people are seeing and approving expenses before the check is even drafted and gets out the door. So those are some of the things I really like, and that's a workflow that I've personally implemented in over a dozen practices and has worked very well for practices around the country. So accounts payable is what is, normally here we have what's called double entry bookkeeping, debits and credits. And it is a system to make sure that when you pay out some things that everything is properly credited or debited to different accounts. For example, if I pay the rent check, it is going to actually be two transactions. One is I paid the landlord, Mrs. Jones Realty. At the same time, it's also going to take money and make an adjustment to my check account balance. And so it's just constantly moving. That's what's called double entry bookkeeping on a very basic level. One of the things that's important with any accounts payable system is what's called the chart of accounts. And the chart of accounts is a series of buckets, if you will. And these buckets are classified by just about every practice I've ever seen of any business organization. There are 5 primary buckets. And those buckets are assets, liabilities, owner's equity, income, and expenses. And those pretty much don't change from any type of business that it has to pay bills. The business, whether they're taking money, and hopefully you're taking in more than you're shipping out. But it is a very logical system, and it makes it really easy to keep track and record. And so because of this, it's really important because it serves as a framework where when I pay the rent, it falls into one bucket, and when I pay for the vaccines, it falls into another bucket. And by classifying those into different buckets or bins, however you want to hold it, allows us to report how much did we spend on rent last year versus vaccines. And so if you think of the chart of accounts as buckets or bins, it really makes it easier in order to understand so that you can more accurately understand the business and the way things are kind of moving around. Your monthly reporting is simply a summary of all the different amounts that hit all the different buckets. And, how well you do allocating the expenses into the different buckets, the more granular you are, the more granular your reporting can be. And, bless their heart, I saw one practice, all the expenses related to this one location literally went into one line item called location 1, location 2. I wanted to see the rent. I wanted to see how much that, it was horrible. And so that's why you need to think of it in terms of buckets, and how do we organize those buckets so that we can better have a better understanding of the business. And we're going to share with you a system of buckets or accounts that we use in a few minutes. There is no universal list of chart of accounts. There's no one size that fits all. And a large portion of the time, you can find some resources such as MGMA, Medical Group Managers Association. They have a very nice classification that applies to most medical practices. But the reality is that whenever you open your practice, your accountant usually set up the chart of accounts. And from their point of view, they were really primarily focused on tax preparation, not necessarily looking at what you as the owner or the manager of the practice would need month to month to manage the finances. And because there's too much focus on tax preparation, that's the way those buckets are organized. And so it becomes really frustrating when every month you kind of have to mentally add different numbers and different columns, or you know how to classify things a little differently in your head to get a sense, how much does it cost to run this practice? And so, for example, accountants will treat the employed physician. Let's say Dr. Blanchard and I have Vanchiere Blanchard Pediatrics, and we hire a physician, Dr. Hart. Well, according to the accountant, Dr. Blanchard and I are the owners of the practice, and Dr. Hart is the same as a receptionist or a billing clerk or anyone else, because on paper they are an employee. And so the accountant will lump in Dr. Hart with all the other employees, and that does not become helpful when we're trying to manage the practice. As a consultant, the very first thing I want to know is, what is the operating overhead? What does it cost to see and provide care to that child on a percentage basis? And if Dr. Hart's labor cost is bundled up with the receptionist, it becomes really murky. It becomes really a challenge. And so I have to do some I kind of have to back into some numbers. But you as a practice, you really don't know your operating overhead rate, because the operating overhead rate should be how much money did we spend prior to provider compensation on a percentage basis of our revenue. So if in your bucket you have Dr. Hart, the employed physician, along with all your receptionists and nurses and everybody else, it makes it cumbersome every month to be able to calculate how much did it cost. And so what we want to do is we want to design a series of buckets that allow for financial management and monitoring of the practice, while still being able to ensure that we're preparing properly for our tax returns and so forth. Accountants usually build these charts of accounts simply under the guise of preparing your taxes, as I mentioned before. What we want to do is say, how can we strike that balance between having a good set of books that follow general accepted accounting principles called GAAP, while at the same time being useful, and I don't have to spend an hour every month doing this. So I'm going to walk you through in the next 5 to 10 minutes over different types of buckets. Now, there are 5 primary areas that I mentioned before that are universal across every business: assets, liabilities, equity, income, and expenses. Generally speaking, I'm not worried about the equity. I'm a little worried about assets. And the assets and liabilities show up on the balance sheet. But if I'm working with a practice month to month, I'm really looking at the last 2 items primarily, at the income and the expenses. How can we get those buckets set up in a way that just makes some sense? And so what we want to do is also recognize that sometimes when I look at a chart of accounts, it will say Batsing Burlington office, Batsing Boston office, or whatever other towns may be around there, but location 1, 2, and 3 all listed on the chart of accounts. We don't need to do that. Just about every accounts payable system, for sure QuickBooks and Peachtree, you can use what are called departments. So let's say, for example, Dr. Blanchard and I are both owners in a practice, and Dr. Blanchard has one location and I have another location. Well, Dr. Blanchard's at location 1. Any of the vaccines that come in, that invoice comes in, we set it to the vaccine expense account, and we set the department as location 1. By the same token, when we go to pay ourselves, I may also use what's called a class. And a class, which is different than departments. And I don't want to complicate this or make it confusing, but other than to point this out, so you can leverage what you already have to have a nice series of buckets. You don't need to be overly granular on the buckets. You can use departments. You can use classes, which may be, these are all Dr. Blanchard's expenses. These are all Dr. Vanchiere's expenses. And there is a way to hit that without too much difficulty. So with a practice-friendly chart of accounts, we're able to very quickly assess the operating overhead. We're able to watch on a fairly granular level different types of expenses to make sure to see if they go up or down, how it compares to the budget. And it just makes it easier on a monthly basis to be able to stay on top of what's going on within the practice. So one example of a chart of accounts, it would be staff wages. Generally, there is a universal series of numbers. So generally speaking, when you have employees, that series of numbers starts with a 5. If you have income, that number starts with a specific prefix. But what we want to be able to see is something further like this. We want to see staff wages, and then we want to see it broken down: receptionists, medical assistants, nursing, billing staff. And this is primarily done in the payroll system. So how you set up your payroll, whether you're using Paylocity or QuickBooks Paying or QTS or ADP, you should be able to assign departments and classes within there to make sure you keep everything organized. Interestingly, the information should be able to feed over into your QuickBooks, whether it's manual or an automatic setup, but that's something that you can work on with them. But these are the general groupings. Normally, the 1,000 numbers are all your checking accounts, your savings account. 4,000 is going to be your income. 5,000 we're going to use for non-provider. So these are the first digits of all the different types of buckets. And I'm about to show you, we're going to go through some of these. We're not going to hit every single detail, but I did share with Jan, she is going to make available a spreadsheet of all of these different general ledger chart of account numbers and identifiers if you want to use it going forward. So income. A lot of times I will look at a financial statement and it will say patient income, insurance income, and refunds, and that's it. So there's a group of practices that we do that. Another group of practices will say Dr. Blanchard's income, Dr. Vanchiere's income, Dr. Hart's income. They'll kind of classify it that way. What I tend to support is let us track our revenue and income based on the type of payments that are being made. And this may be a little bit overkill for a small practice, but this is the only opportunity that you really get to classify the origin of your revenue, and it actually makes it a lot easier to reconcile. So, for example, if I have, let's just look at credit cards. I set up in my chart of accounts, account bucket number, general ledger, general chart of account number 4011 is credit card. I see every deposit that come in through the credit card merchant, whether it be Payment Pros or whoever you're using, it gets classified in the accounts payable system under that general ledger, that chart of accounts number. And that actually makes it a lot easier when I go to reconcile to make sure that all of the money that we ran through the credit card terminals actually end up in the account. This is a very granular thing. And a lot of this is more art than science. And, this is probably the most detailed that I've ever gotten, but it's one that I've used many times before because you have no other way to identify the source of that revenue and where the money's coming from or how did it hit your bank account. In terms of expenses and those general ledger numbers, I generally put all the physicians and nurse practitioners and providers, I treat them separately, and these are going to be all non-provider salary costs. I'm going to group together in a 5,000 series of numbers. And here we have the office manager, your billing people, your nurses and MAs, I may group together, your receptionists. I'm going to have those categories so that I can look over time how much I'm spending in those different functional areas. This will require that you set up some things within your payroll system. And If you tend to just lump it all together, then you can just rely on your payroll system to spit out the reports on a periodic basis. But if you want to see it on the profit and loss report and be able to track it, we need to have those granular buckets or chart of account categories in order to make this work. So we also want to identify any of the practice expenses related to health insurance and dental and life or any other benefit that you may be offering. So anything related to the cost of the staff, I'll just have to look in this one location, 5,000 series. The next area, and this is quite a long list, is related to any of the expenses within the practice that keep the doors open. Rent, supplies. Because vaccines and medical supplies are so expensive, I generally set them up in a second series of numbers, which will be on the next slide. But these are all the costs that it takes to run, not including staff or owner expenses, because we're still going to get to there in a few minutes. The next group or major bucket is going to be medical supplies. I want to see how much are we spending on McKesson and Medline, how much are we spending on the vaccine. I have seen some people who look and they'll have, for example, they'll have vaccine, it'll say $7,200, and then at that point they'll have a line item for Merck, Sanofi, and the others. So with that in mind, it is an area that people can continue to do those things, but generally speaking, I want to be able to isolate and quickly identify on the profit and loss report what were my vaccine costs. A lot of accountants will sometimes set up your vaccine at what are called COGS, C-O-G-S, the cost of goods sold. And when they do that, they're saying that the vaccine expense is a consumable item that is going to be essentially sold to the patient over time. And I don't always like that. And again, it's more of a moniker thing, but so I like to see it as a line item because it is an expense that shows up on a regular basis and I like to see that line item very, very readily identified within the system. Provider expenses. For provider expenses, I do like to see the physician, for example. We may look and see the employed physician and non-employed physician side by side. So if Dr. Blanchard and I have Dr. Hart working for us as an employed physician, his wages and everything else will be classified separately instead of grouped up with the staff or grouped up with our owner's expenses. I'm going to do the same thing for nurse practitioners and physician assistants. They're going to have their own series of numbers. So if we had a nurse practitioner and Dr. Hart working for us, you'll see on the profit and loss report, you'll be able to track over time how much did we spend on Dr. Hart and any other employed physician, while at the same time we're able to readily identify it. The reason we want to do this is because by having that level of granularity, it allows us to really understand what's going on in the practice instead of all these buckets of information not being really granular to understand what's going on. So the last area that we like to look at is the 9,000 series, which is owner expenses. These are everything related to Dr. Blanchard and I because we both own the practice. We need to be able to track it so that at the end of the year, when we have a bonus or we're trying to reconcile our earnings, I know exactly how much money Dr. Blanchard's already received and how much is due to me and so forth. What you'll notice is sometimes you will see a different line item, for example, Dr. Blanchard bonus, Dr. Vanchiere bonus, Dr. Vanchiere salary, Dr. Blanchard salary. You don't need those line items. You can put both of our salary expenses into one bucket of owner compensation, or 9110, and then we'll use a department or a class to remind us how much was spent for me versus her. It's a very common thing, and but there's not many people are really using those classes and departments to help organize it. And with departments and classes, it helps you to get that granular data, particularly if you have more than one location. And so it generally becomes helpful. Excuse me. Accountants generally, when I have a personality that probably annoys some people, but where they really go bananas is me trying to look at my payroll tax cost. You know, if you're a decent sized practice, you could be looking at easily a couple $100,000 in payroll tax liability. And you know, if you have $1 million in payroll, the employer portion is probably 80,000, give or take. And what I want to do is I want to break out my payroll tax liability so I can see how much of that was related to staff, how much of that was related to the owners, how much of that was related to non-owner providers. That way, I can track it on a month-to-month basis and be able to really measure what my operating overhead rate is and identify where issues are. The other thing that drives them a little crazy is, let's say, for example, we have Dr. Hart, who's an employed physician working for us, and he had a payroll deduction of $1,000. Generally speaking, they'll just make a payroll payable account, and we need some granularity there. And the reason I need it is because when I pay him, let's say $8,000, I'm going to take $1,000 of that and put it towards his retirement plan. I kind of have to put it in a payable account, a liability. And so by having this on a granular level, it allows us the ability to make sure to quickly reconcile, because the people you pay for your 401k plan is not always the same people that you're sending the money for your insurance or your health insurance or short-term disability. So this really helps us to be able to reconcile, hey, did I send the right amount of money? And then the last part is retirement expenses. Generally speaking, I want to see that broken out as well, so that I can track on a monthly, quarterly, yearly basis, how much did we spend on retirement for the employees, the employed physicians, as well as the owners. And if you use the chart of accounts that I've used and I'm proposing and making available, it makes it real easy to track that. So how do you get to that point? The way you get there is not easy, because for the last 2, 3, 5, 10, 15, 20 years, you've used the same chart of account. And the accountants don't want to have to go back and redo them. I will tell you that this is not easy, and it takes a little bit of time, but your accountant can do it. And if they can understand your point of view and why you're doing it, then it becomes helpful, and they'll find a way to do it. And the reason is because we need to be able to minimize the amount of time every single month I have to kind of move numbers around, and while at the same time having a good set of books for tax reporting purposes. So what some practices will do is they will create a new, as of July 1st, we will use a new account, QuickBooks account, with the new chart of account. That's the most extreme measure. The second is they can look at their existing chart of account and add and take away some that kind of mirror what's going on and what we propose. And then the last part is to sort of have some crosswalks. Leave the chart of accounts alone, but every month the accountant or the bookkeeper or the office manager goes through a series of Excel spreadsheets. You can use that and say, you know, what was this one category before is now falls in line. There are a lot of different ways to do it. But what you want to do is regardless, if you want to get with the accountant and say, look, I need a way to more effectively measure the cost of the practice. This needs to be financial management based and not tax preparation based. And what can we do? And through that conversation, you'll have it to be able to say, I need to be able to quickly identify how much did we spend on our staff, how much did we spend on vaccines and other bills, and with a good chart of accounts, you'll be able to do that. So, Jan, if I haven't put you to sleep yet, we can, I'm happy to take some questions.
Yeah, there is no way you put me to sleep with this thing. I honestly, looking at this from the perspective that you've added, it illuminated some things for me, even just from my past experience. Like I had been responsible at one point for inventory, and I knew that there were numbers I had to assign depending upon where the inventory was going and how it was being used. And those match up with the numbers that you introduced me to today. I had no idea that that was contributing to—
So universal.
Yeah, that it was, I had no idea it was a standard. I thought it was, our CFO just wanting us to add what, I knew it was a category, but who knew that it was something that was going to make everything from that point on easier. These were the building blocks of those reports we would have to create.
There is a method to the madness.
Yeah, that was a surprise to me. And the other thing I loved was the idea of approaching your accountant to do bookkeeping. I would have thought to ask an accountant to do bookkeeping work, or that they would ever make an offer to do work at a reduced rate, or at the rate that the work is valued at. That is a really great suggestion. I wouldn't have thought to ask that.
And I'll tell the accountant, say, look, why should I pay $300 a month, $300 an hour, or $150 an hour for you to reconcile the checkbook when I know you're paying an intern to do it? Okay.
If
so
they're even paying the intern.
To the chase. Yeah, exactly. So that's the reality of the situation. So have no shame, and and saying, look, there are other ways to do it. Now, QuickBooks now has a accountant partner program. You can go through them, and they'll, believe me, bookkeepers are a dime a dozen now. And yeah, so it's awesome. But yeah, this is the general grouping that you were talking about.
Yeah,
it is fairly standard. Yeah.
I had no idea. Yeah, the cost of goods sold is something that was familiar to me too, but you gave me a much better understanding of it.
Yeah, so the cost of goods sold, I think, kind of shows a disconnect from the accountant. The cost of goods sold, when they're talking about that, they're thinking like a retail store, and vaccines are not really like a retail store. There are a lot of similarities, but there are a lot of differences. Mm-hmm. And so what they'll do is they'll say, your income is this, your cost of goods sold is this, here is your margin or your gross net income, your gross profit, and then they deduct the expenses and dot. Yeah. And philosophically, that just points to the fact they really don't really understand. What is different, on this list is numbers that start 1 through 6 is universal. The numbers that start 7, 8, 9 is pretty unique. So it's sort of leveraging what the industry norm is, but yet still be able to identify here are the expenses related to what's unique for a medical practice.
Yeah, that makes a lot of sense. Yeah, and hearing your description of and recommendation for the buckets, I couldn't help but think, what on earth would we do if we didn't have like procedure groups? When I put it into partner parlance, or into terms familiar to the other units of business that we work with, if we didn't have procedure groups, how could we know where the income was coming, where to anticipate the income coming, the types of service that are being rendered? So it's all those little units that add up to the larger categories. That all makes a lot of sense to me.
Right. Yeah. And by
Well,
the way, sorry for the interruption. There's someone from PCC calling me right now, so I don't know if we missed something or not. So, but yeah. So,
will you give
sorry
me
for
one
that
guess who that
interruption.
was? Is he an employed physician in Dr. Blanchard and Vanchiere?
No, I don't know. No, he would call me on his cell, from his cell, but someone from PCC office just called. So anyway,
All right. Sorry
so
about that.
let's see. Any other questions? I
I
mean,
don't
anybody
see any
have any
that
other
came
thoughts?
through. Yeah, let me double check and be sure that no one in no one in the live session um,
All
is
right.
asking specifically about this. But thank you also for that spreadsheet that puts it
Yeah.
where you need it. I mean, that is the perfect starting point for this stuff, if
Yeah.
not at a,
I mean,
that transition.
and like you said, you said the right phrase. It's starting point. You know, most of the time, it's when you start your practice, you got to have it right from the giddy up. And so because that transition is not easy to get to that ideal scenario. One of the things I did want to comment on with the revenue and the income is that, you're already tracking your revenue by provider in PCC. You don't need to do it on the income statement. Do it on the income statement. Look at the origin of those payments. How are those payments getting into your checking account? Because you have no other way to keep track of it. So rely on your accounts payable system to track that, so that over time we can quickly see how much we're bringing in. There are some practices, for a variety of reasons, they don't even post their capitation payment in the billing system.
Yeah, across our clients,
So we got to have
there
a
are people
place
who don't do that.
Yeah, there are some people who don't, and there are some people who will go in and allocate it based on RVUs for that same period of time. So if we got a capitation payment of $5,000, you had 200 RVUs. I had 200 RVUs, and Dr. Hart had 600 because we work them into the ground. That's how we can allocate those capitation payments. But that's a lot of work for some people to be doing. But we got to track it, and we got to keep up with it. So that's why I prefer to use the accounts payable system to track the source of the revenue, because I know I can get the detail I need out of PCC.
Oh, good. Sounds like it works well together.
Yeah.
We did have two expressions. Right. We had a handful of expressions of gratitude to you from attendees. Folks found this very informative, and
I appreciate the opportunity. So,
I'm glad that you were able to join us. Thank you so much for doing this, and we will see you all next week. Thank you.